Folks, if you've been looking at our videos that we've had recently, I gave you an example of a house that was selling for right now at around 44 US dollars a square foot, which is roughly around 500 US dollars per square meter, which that's incredibly cheap to be in a pure tax haven. When you look at Bermuda and places like the Caymans, Bahamas, they're way over those figures. I'm going to tell you why the figures are so cheap today. This is one of the things I'm going to be talking about. And this is probably one of the most educated videos I've done. If you understand this, you can learn more about how to invest in St. Kitts and other type of countries that are either emerging markets or mimic emerging market. Also, if you want to learn more, if you go to our website, www.citizenshipquickly.com, you can get more videos like these, and not just on St. Kitts, but other countries as well. All right, let me get started on this. This chart here is a chart I did on the currency of the UK, pound sterling, and the US dollar. And you can pull this up on Yahoo Currency Converter. And it's showing right here as of today, right now is 1.2616 US dollars you can buy with a 1 pound sterling. Now, the reason I did this chart, this is going to show you and it's going to educate you more on St. Kitts real estate and how it works and when is the best time to buy. And, because so many people are confused, when is the best time to buy property? Well, it's obvious when it's low, that's the best time to be buying property. But the key is how far should you let properties drop before you buy them? Well, one thing I would tell you is if you want to compare 44 US dollars a square foot, go back and take your house and then subtract the lot, approximation what the lot price is, and get the figure what the cost is for the structure. And then what you do is you divide that by the square footage of your actual house itself. And then you can get the price per square foot and compare that with this house that I showed the other day, which was on the video. I had incredible ocean views at 44 US dollars a square foot. And there was another one I sold just recently, not too long ago, that was around 39 US dollars a square foot. And I'm going to show you why the properties are so low and what's caused this. Okay, let's look at this chart here. This chart will educate you on a lot of things. All right, this chart actually, if you go and you look at this chart, and I'm going to show you right here, this starts actually back in around 1992 on this chart. And so it goes back. Actually, it's 1990. The date here is about 1992 here, but it went back to about 1990. So this is about a 30-year period. And this is showing you what the US dollar has done against the pound sterling. Now, what has it done? It's gone up and down, but what has it done long term over 30 years? Okay, it's actually gone up. Now, the chart, don't get confused. When the chart is going down, the dollar is getting stronger. That's the easiest way to remember it. When it's going up, like here, the US dollar is getting weaker against the pound sterling. So if you go back to this point right here, you can see this was actually back around 2007. This was right before the financial crisis hit. And then what happened was when it looked like all the banks were going bankrupt back around 2008, 9, right in there, everybody flocked and got out of stocks and they went in the US dollar because it's a safe haven. People, I know it and you know it, that the dollar is not a safe haven because of the debt crisis, but in actuality, that's not the way people think. They flock in the dollar whenever there's a crisis. So what's happened here is they flocked in the dollar, okay, and then gradually they started to get more positive on the economy, and they started coming out of that trend and started getting back into equities. But what's happened here, this is taking you all the way to the current date today, and you can see, why is it the dollar getting stronger? Why is so many people putting money in the US dollar? Well, the coronavirus is another crisis that's come about, and people have gotten scared about what's going to happen with all the people being laid off. So they've sunk money, and they've gotten a lot out of equities, and they're putting it in the U.S. dollar itself. All right, now the reason I'm showing you this is the dollar over the last 30 years has constantly gotten stronger against the pound sterling. At one point, you can see right here, the dollar got extremely weak. You could have bought basically $2.10 of US dollars for every pound sterling. That was a real high point in the pound sterling, and the dollar was very weak at that point. But the reason I'm showing you this is emerging markets typically goes in the total opposite direction of where the dollar's going. So if the dollar's going up constantly, which it has, it's going up. Remember this chart, when it's going down, the dollar's getting stronger. As the dollar gets stronger, emerging market equities, and what you'll find out is real estate technically will actually go in the reverse order. And let me show you why. And I'm going to show you this on the next page, and it will explain this a little bit better. All right, this next page is actually an ETF that mimics the emerging market equities as a whole globally. Okay, now this actually is called the iShares MSCI Emerging Market ETF. Now, by the way, too, I'm not an investment advisor. We don't do tax advice. We don't recommend this equity. We don't recommend any type of currencies. We are in the real estate market and immigration business. We'll consult with you on that. All I'm trying to do is I'm trying to show you and get you educated here on how these work with real estate, okay? But I'm not going to advise you to go in this emerging market ETF or any other type of equity. All right, so now let's look at why I'm actually showing you this. All right, now I didn't go back 30 years on this. I went back on this 2003. Now you can see right here, this has got, it shows 2004, but 2003 is right here, okay? So what I want to show you is this chart. This chart, if you'll notice, it actually runs from right here, which is 2003, April 11, 2003, you can see that. And we ran it all the way over to the current date here now, which is July the 8th, okay, 2020. All right, the reason I'm showing you this is what happened, as you can see. The equity market in the emerging market went straight up here, and it peaked around in October 2007, and then it took a huge fall. This is when the financial crisis hit. And then you can see it came out of it, and then it started going back down again. But the funny thing is, if you go back out here to the very end of this, it's still lower today than it was in 2007. That's 13 years ago, okay? Now, the S&P 500 index did the same thing from 2000 to 2010. It was 18% lower even after 10 years. People really down on the S&P 500 index at that point. Now, if you look at the S&P 500 index today, the ETF hasn't even come back. It hasn't even come back up to this high. It's lower than it was at this peak back over here. The S&P 500 is way beyond its peak. Okay, so the valuations on emerging markets, technically, not just price earnings ratio wise, but the actual valuations are lower because the currencies have been beat up so much. We're talking about currencies, not just emerging markets, but Canada, currencies that are tied to commodities. Canada, you're looking at the Russian ruble. Ruble's been killed. South African rand. All these emerging market, they're tied to emerging markets. The Colombian peso. All of these different currencies have been really, really beat up. The yuan has been beat up against the U.S. dollar, but this is a temporary type thing. And and now it's taken a long time to get out of this. I mean, we're looking at a 13-year period that the emerging market has done nothing. Well, the reason is, let me tell you why. Remember I told you that property in St. Kitts that was selling for $44 a square foot? The reason it's selling so cheap is a lot of our buyers here in St. Kitts buy from Russia, China, the UK, Europe. These are currencies that have gone way down, so it's very expensive for them to buy here. If you're buying in US dollar terms and EC dollar terms in that currency, you're not seeing that. You're seeing where the prices drop down tremendously buying with those currencies, okay? Now, what's going to happen is as the dollar starts to plummet, which is going to happen, I can't tell you when it's going to happen, but over the last about 50 years, it's averaged, depending on what time period you're looking at, the dollar goes in a bull market for about 6 or 10 years, and then it reverses. But we're at a huge run-up in the dollar right now. So once this starts to catch back up, see right here, we're below that peak 13 years ago. The U.S. market's way above that. What you're going to see here is when those currencies that I told you are beat up come back, what's going to happen is it's going to be a lot cheaper to buy real estate over in St. Kitts. And you're going to see that one property I mentioned to you was $44 a square foot. You're going to see a huge run up in that and other properties. I did this on another video, but we actually shopped around to try to find the cheapest builder we could find to come in and build a new home with just the very basic building materials. The cheapest we could come up with, and I had some builders said you can't build it for that price, was $130 a square foot. The one that's a resale that's already built is $44 a square foot, and then you don't have to hassle with building contractors. But why is it that's happened? Well, the reason is prices have not changed that much, okay? Because the dollar has constantly gone up, and we don't have the buyers from these other places that have come in because their currencies have plummeted. And so this is the reason. Now, you can, as a U.S. buyer, U.S. dollar or EC dollar buyer in those currencies, you can buy at a steel price. And if you want to compare it, like I said, take your house where you're living now, whether it's in Europe, U.S., Canada, wherever it's in Germany, and get an approximation of what your lot is. Take it and subtract it out, okay? Then take the approximate price of what your building cost is. So if your house is $500,000 and you take $100,000 out for the lot, then your house, let's say, is $400,000. Then take the square footage of inside the house and divide it into that $400,000. You get your cost per square foot, and I doubt you're going to come up with $44 a square foot. And especially in a tax haven that has no income tax, no capital gains tax, no estate tax, no inheritance tax. And all of these tax havens, I don't have time to give you the figures. You can do your homework yourself. Go look at the prices of properties in Bermuda, British Virgin Islands, places like the Cayman Islands. These are pure tax havens, and look at the price of the properties there and compare them with St. Kitts. There's no comparisons. The property prices here are incredibly low. I can look out of my window on a clear day and see St. Bart's. And 10 years ago, I saw a property up on a hilltop. It wasn't even ocean view. For a quarter of an acre was $4 million US. Now, St. Bart's is a very expensive place, but that just shows you how nice it is in the Caribbean. Anyway, if you got a question or comment, just put it below. Also, if you want new videos as they come out, they're similar to this. We go through other countries too. Just hit the subscribe button and you'll get these videos as they come out. And also we deal with about 74 different citizenship by investment, residency by investment countries. I think you'd be interested in learning about. We deal with other ones too. We like St. Kitts because of all the tax advantages here, dual citizenship, English speaking, great weather, close to the US, Canada, direct flights to the UK. But if you got another country in mind, we have other countries too that we can work with you on. And if you got a question, when you go to our website, just hit the top where it says apply with us, fill out the questions. At the bottom it says send back to us. Hit that, and then we'll get back with you and see what we can do to help you out. And I look forward to talking to you on the next video. Take care.